Hey, it's Clay, and this will be a video chart on ticker symbol BLIN. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So all this here may look like several days worth of time. It's actually today's price action broken down into 30-minute time slices. I like you this time frame that does a good job of telling the quote-unquote story of the price and then makes mapping outward levels of support and resistance a bit easier to see. And this situation kind of helps adding some black and white into the chart because right now, I'll admit, yeah, there's a lot of gray area, and this is a very sketchy looking chart because is it bullish, is it bearish? I mean, the price has made a nice move, and all of a sudden there's this very deep pullback, but it's not like the price is totally crashed, but it is still a pretty deep pullback. So bullish, bearish, like I said, if you're kind of, I don't know, what is it? Well, what I want to do here is map out, an initial area. Whoops. There we go. Sorry about that. Map out an initial area to kind of keep an eye on. And this is going to help dictate just exactly what's going on. And that's 41 cents. Why is 41 cents so important? Well, let's look at a couple different scenarios. And the first one, I'm not saying what's going to happen, but just potentially, if the price were to come down to 41, break below it, and then just continue on down, what would you have at that point in time? You would literally have the price right back inside of this range down here from where the big move started. That right there being defined as quote-unquote the big move. And not to insult your intelligence, but price movements with true power, with genuine strength, the price is not going to go back to where it was, right? I mean, the price is, that would be the exact opposite of any sort of move. And in fact, I would argue that puts it at pump and dump status, meaning you had a very, very nice move to the upside, and then all of a sudden, within a couple of days, the price is right back to where it started. I mean, that's the epitome of a pump and dump. Again, I'm not saying that's what's going to happen, but that's why 41 cents is important from that perspective. Now, on the flip side of things, let's say the price comes down here, bounces around, so basically does what it's done already, actually several times before. So it does that a few more times and then eventually start to work its way back upwards. What would you have in this situation? Well, you'd have a set of lows right here. You'd have these lows down here. If you picture each one of those as stair steps, well, hey, now you have stair steps progressing in the upwards direction. And that's what truly strong moves do. A bullish move is going to make progress forward. So essentially 41 cents just acting as almost a vocabulary definer, meaning is the price making progress? Again, making progress associated with bullishness, or is the price going back associated with bearishness? So use 41 cents to help kind of cut through all the shadiness. And, we'll use that to figure out whether or not this chart is actually bullish or bearish. One of the biggest questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now, and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.